Uh, Now let's focus on imbalance. Previously we look at this pattern. See, these two patterns are useless if you do not understand imbalance, right? The essence of you knowing how to apply this, the essence of this teaching is so that you guys should be profitable. So it's not just about cramming patterns on your head and co. There's a psychology behind everything, right? That's why I say that you have to think, you have to understand the market like a business man, right? So now, imbalance. From the word imbalance, you can know that okay, something that is not stable, something that is not equal, something that is not complete, right? From the word, you're supposed to understand what imbalance is all about. But let me give a brief explanation. This is a market. In a market, there's both buyers and what? Sellers. But imagine that in this market, people just go there and place their goods and there's nobody coming to buy, right? It's not making sense. You can't earn profit like that. So coming of buyers into that market to buy goods has balanced the equation. It makes sense. That's what even make it to be a market, right? If there's no buying and selling, we can't call it market. So note, Forex is a market. Forex trading, right, is a market. So bring that understanding to this. Now, if you pay attention very well, this is a strong momentum candles. Buyers, buyers, buyers. But notice there's a gap in between these points. Now, the high and the low of the top candle, you can see that there is a gap in between them. Price will come back and touch that level to balance the equation. Let me just use the word balance the equation, right? To fill that gap. But look at this. The moment there's a breakout, you can see that the shadow of this stock candle is touching the line, so it has already balanced that. So this place is not imbalanced, while this place is imbalanced. So imbalance acts like a magnet. It will always attract price back to itself. The price needs to come back to fill that gap. This one is bearish imbalance. You can see there's a gap, but this one is balanced. There's no gap. There's a breakout, but before breaking out, it mitigates that level. So there is no imbalance there. It is balanced. It's very simple. So let's proceed. Now, this is a sample of how it is when you are looking at the chart. So there's a breakout, right? There's imbalance, but this one is not imbalance. Can you see? Breakouts, we test on it. So if you are looking at lower time frame, this is what you are going to see. On the lower time frame, you will see something like this, right? So that is that. This is a bullish example. Let's look at bearish example. See, this is a bearish example. See, it is necessary that you look out for imbalance, spot it out. Make sure you search for it anytime you want to trade. Is one of your confirmation. It will determine what you want to do in the market, right? So I call it your point of interest. Anytime you see imbalance, it is called point of what? Interest. It means the area where you'll be paying attention to trade. Now, note, it's not an entry point. I call it point of interest. It means that when the price get there, you look out for some things in order to enter the market. So that is that. Okay. Now note, breakouts with imbalance and without imbalance. Let's look at it. This is a breakout. You notice that this is a breakout with a imbalance. But when there is a breakout without imbalance, what is likely to happen? Like this now, you can see there's a breakout, but there is no imbalance here. Most of the time when you see that, it will lead to liquidity sweep. See what happened? Liquidity sweep, a breakout, and it enter again and sweep this level, then push up. Why did it push up? You will notice that there is imbalance here. This is imbalance. This is imbalance. And if you are looking at this as our strategy, you will know that this is our A. Liquidity sweep, right? Then we have imbalance. We also have our B. This is our B. Then there's a breakout. Because there's no liquidity and there's no imbalance here, because there's no imbalance here, it will cause liquidity sweep. Then enter. That place will be our C. Then we are expecting that this price should come to this level, sweep this liquidity, right? Then push up. And that is what happened. That is what happened. So look at this. Liquidity sweep. It will need liquidity sweep, then it push up. Okay, let's look at trading view and spot out some imbalance in the market. Just to, I will ask you guys question, then you tell me. So, okay, let me just ask you guys. Here, where is imbalance? Check this area, where is imbalance? Okay, this is trading view. Let me show you some few examples. What you are just trying to do is to spot it out. You are not analyzing trade yet. You are not analyzing trade yet. You just want to spot it out. So look at this. Look at this. This is imbalance. Imbalance. Very good. There's a breakout. Just look for a breakout and imbalance. Okay, look at this place. There's imbalance. Can you see that the price comes to that level and continue in its previous trend because of this imbalance?